Valuation of current liability. Auditor should make sure valuation is done for items, trade creditors, bills payable, loans and advances, and accrued wages by obtaining a list of items, by inspecting documents, defining the obligations, testing transactions, and confirming obligations. First, let's take a look at what is trade creditors, what the auditor does for auditing them. First, auditor should prepare a schedule of trade creditors. This can be prepared from the purchase journal and creditors ledger. From the purchase journal, the entries need to be posted to creditors ledger. What is desired information can be obtained from the balances in the creditors ledger. Next, the auditor should vouch purchases book and returns book, which is purchases, returns, with the help of documents, credit notes and invoices. After that, goods inward book entries are ascertained during the last few weeks of period, that is in the auditing period, where the goods are fully accounted for. If necessary, maintain a correspondence with creditors to confirm the liability. The auditor should also obtain and review, if obtained, creditor statement. Scrutinize documents to see if there is missing any purchase invoices or inclusion of any expenses or fictitious invoices. So that's that. Next, we'll take a look at what is bills payable. The auditors should make sure if there is any outstanding bills payable in the bills payable book at the date of the balance sheet. Bills payable are normally acknowledgements of debt payable. Bills payable are short-term liabilities payable within an year. By verifying the bills paid are cancelled and the outstanding liability correctly ascertained and enclosed, the auditor can valuate any outstanding bills payable liability truly and fairly. After bills payable, we'll see what the auditor does with loans and advances. Auditor should obtain confirmations of securities held against advances, confirmation of balances and reconciliations, while doing valuation of loans and advances. Loan agreements and mortgage agreements between client and the lender should be thoroughly examined. The auditor should inquire about the objective for borrowing loans, whether it has found utility in its assumption of usage and for the purpose for which the loan is taken. Provisions. Provisions are liabilities whose existence is definite but whose values need to be estimated. Under provisions, we may encounter accrued wages, interest, product warranties, taxes, service contracts, etc. The auditor should check wage sheet and determine wages outstanding towards the end of the accounting period. The auditor should check the accuracy of the provisions for taxation and suitable adjustments should be made before finalizing the said assessments. The auditor should also make sure provision for bonus to the employee is covered under the head. So this completes valuation of current liability.